Hey everybody, so in today's video I wanted to talk about how you could potentially call a short-term top in a lot of these bear market rallies. So before I actually go into this video, I just want to give my new playlist a shout out. It's called Initial Company Screenings, and what I show in this playlist is what I look for initially when I start investing in a company. So these are basically very basic things like PE ratio, earnings per share, and share buyback. So go ahead and check out that playlist, and I'm going to continue adding to that playlist, so you will get some more value out of that. No pun intended. So going right back into this video, in this video I'm going to talk about technicals, so totally different. Now, what I want to point out here is the S&P 500, SPY ETF, and we're going to look at some different patterns here. So I'm just going to turn off the moving averages for now. And we're just going to look at this pattern here from March of 2021. And it goes all the way up until September of 2021. So here, it's pretty clear to recognize that, we have some solid support. And we could see that when we move, when we add the moving averages, we're basically following the 50-day moving average here. So let's go ahead and flip that off. So you can see that we also have a top trend channel that acts as resistance here. So maybe if you recognize this pattern building out, we have 1, 2, 3 touches. And then we have another touch right here. This might have been a good area to maybe grab a few short positions or grab some volatility hedges, because a reasonable move would have just been us coming back down to this lower trend channel. But maybe right here you took profits. So maybe right here you took profits because you said, okay, we're at the bottom of the trend channel, and you weren't expecting us to break down this time. You weren't expecting that. So right here, volatility is probably going to get really high. So if you sold right here, you did a good job. You stayed disciplined. You did a good job. Now volatility is probably getting high when people see this trend break, and when we look at this, that's the 50-day moving average that broke underneath. Now, sometimes you see these traps, and essentially this trap is basically us getting back above the 50-day moving average, but you have to recognize that we broke this trend line that's been acting as support for 6 months. So to me, this would have been a trap that I would have been more likely to start shorting or grabbing some hedges. And I probably would have drawn this trend line right here. Or I probably would have drawn it like this at the time. So, at the time, maybe I pick up these hedges right around here, and then right here I might be getting scared, But there is something called price action rounding out. So what rounding out basically means is that, you get these, you essentially see momentum pick up, and then you start seeing it fade. So you see this rounding out of price action. So here you see this rounding out of price action, and then you start seeing this volume fade and then pick back up. So this right here maybe would have been an area where, I would have just picked up some hedges of some sort just because I saw the 6-month trend break down. When you see trends like this break down, they don't usually come back up right away. So something to pay attention to when you see these longer term trends breaking down. Now, let's get rid of that line right there. So let's say you actually grabbed a short right here. Now your problem might be that you hold on to your shorts for too long. You bought a put option and you've been holding it here, and then you saw this rally and you said, oh no, no, this is just another lower high. I'm just going to keep this option, and we'll see what happens. Now all of a sudden we see this massive gap up, and now we're looking at something like a double top. So yeah, right here, double top. So now you might be getting really nervous your put options probably ate a lot of theta and you're probably down and you're losing money. But when you see the candle close above this resistance line, you want to sell. You just want to sell. You want to be disciplined. You want to just take the loss before it becomes a full-blown loss. So definitely take profits when you need to take profits. You can always short again. Just remember that. And take the loss when you need to take the loss. When you know yourself that, oh, I'm definitely going to take a loss. And some people do this, they hold on to it anyways. They say, well, I might as well. Well, that's definitely not the right thing to do. You got to be disciplined. You got to take the loss when you know that that loss is going to happen. And that might not be certain, but your gut's going to tell you when when you're going to take that loss, because you're probably going to be shitting bricks right here. So sometimes these trends are a little bit hard to actually notice because while you're right here, this trend is still building out. Now that I'm looking back on it, it's really easy for me to see the trend, but at the time, it wasn't as easy. So one thing I do like to do is I like to build my trend lines right around gaps. So as you can see right here, there's this very clear resistance line, and it matches up with resistance right here, and then it goes right through this gap, and then you see this touch right here, but then right here, you see a trap. You see, you basically see this false breakout, but then notice that when we come back, we actually go back and we touch both the bottom and the top of this trend line. So things start getting a little bit wonky right here. And then we go back up. And let's say you grab a put position right here because you recognize this top trend line, but then you saw us close above. If you saw us close above, you should have just taken the loss right there. Just take the loss. So it's not always a good thing to get the puts right at the top. Sometimes you want to wait and you want to see how that day is going to close out. And if that day is going to close out in a manner where, we reject this, that's when you want to be probably a little bit, or that's when you're going to feel a little bit more sure about getting that put. But if you got it right here intraday, then if we close right here, then yeah, you want to take that loss. So now we see us touch this top trend line again, and we actually broke past this resistance. But at the end of the day, we faded. Now, this should have been a good sign. Hey, you know what? I'm going to pick up puts here soon. And you'll also notice that volatility, or not really volatility, but volume is what I mean. Volume started getting really, really low around here, and then you see it pick up. So right on this candle, you see volume really pick up. So right here would have been a great time, or this next day, or the day after that, to start picking up a put position, because now we're underneath this trend channel. Notice that we're underneath this trend channel. This is going to act as resistance now. So this would have been a pretty good time to pick up volatility hedges, puts, whatever. And then you would have seen this nice move down. Now, where do you take profits? I probably would have taken profits right at that 50-day moving average. And, you probably could have taken more profits if it went all the way down here. But just out of discipline, I would have taken profits right here at that 50-day moving average. So now, we got to extend out this trend line, because we eventually made it back above this. So it's good to just go ahead and extend this out. And let me just turn off the 50-day. All right. So now we essentially have this trend line right here. Now we can work off this. So now the next area that I want to point out is this move right here. So moves like this can be very dangerous to try and short, because you have to recognize that, this isn't really a rising wedge. Nothing about this is really telling me that this is a rising wedge. This is more like a upward trend channel. So these type of rallies, you don't want to be shorting. You want to wait until this bottom trend line starts invalidating. So sometimes you'll see this price action rounding out, as I told you guys. So rounding out price action is, when you start seeing this upside down parabola, and notice that we start creeping out of this trend channel. Notice that the volume is getting extraordinarily low, very, very low volume. And then now you start seeing volume pick up a little bit. Maybe if we're just going to draw resistance right here, maybe you would want to pick up your shorts. Maybe you would have picked it up like right here or something. But you saw this candle, and this candle is there to trick you. It's literally there to trick you. You see this false breakout. And then maybe you sold. Maybe you sold right here. You saw this false breakout and you sold. But you saw this candle the next day, and then you just, you face palmed your head and you just say, ah, damn it, I shouldn't have sold those puts. So what you probably should have done is you should have waited for this day to kind of come to an end. And you could pick up SPY puts 15 minutes after close. You don't have to pick up puts intraday. You could wait until close. So, if you recognized that we faded and then we just got right back into that resistance zone, that would have been a good area to pick up shorts. And then you would have seen this nice move down the next day. Now, if you were paying attention to this longer term trend right here, you would have noticed that we broke trend on this day right here. And then what's worse, you saw a doji the next day. Now, a doji candle is basically signaling some sort of reversal of the trend. So we saw a breakdown of this trend line. We saw a doji the next day. I think it's reasonable to expect further downside. So yeah, you would have seen this nice down move right here, but this bullish candle right here would have scared you off. So, maybe you just sold your puts right here. And then, you would have been right to sell your puts because the next day, we had some more bullish movements. But then also notice that we're coming back and we're retesting this old trend line that was acting as support for a very long time. This would have been a great area to pick up another short, and you would have seen this massive move down. Now I'm going to go back, and I'm going to look at this move right here. So this move was a little bit more obvious. So we had a rising wedge. So a rising wedge is essentially when you hit the support, and then you go back and you hit the top. And then you go back and hit the support, and you go back and hit the top. So this actually forms something that looks like a pizza. So right here, you would have been scared off. You would have seen this hammer pattern. Maybe you would have sold. You would have said, okay, you probably tried grabbing puts many, many times. Maybe you grabbed the put right here because you saw, oh, we're starting to creep out of this. But then, nope, chicken trap. So chicken trap happens. So usually you want to wait a little bit to see that price action round out a little bit. So as you can see this volume profile, you start seeing volume taper down, and then you see volume pick up. So maybe, right around here, I probably would have waited to see if we could retest that or make, maybe we could see like a double top. So once we broke through that, I'd be just a little bit hesitant to grab a put. Maybe I would have grabbed the put right here, maybe not. I really don't know because, I wasn't grabbing puts here last time. I was kind of like out of the markets for a while because I was thinking, oh, this is going to get really dangerous. I don't really want to get puts because I did get screwed on puts earlier because I didn't recognize this trend earlier. So I actually got screwed on puts right here because, I was thinking, oh, price action is rounding out. And then, nope, just went up another leg higher. And I guess the especially dangerous thing about this move was that we actually made a higher high compared to this one. So, you could have just said, oh, you know what, maybe we're going to come down. And right here, I'm going to grab calls because, I think we're going to go higher. But, sometimes the macro is very, very important. And that's something you want to pay attention to. And let's also just flip on the moving averages, see what actually happened. So yeah, we actually made it back above the 50. And then right here, we knifed below the 50. So this move definitely, it probably would have been hard to short just because we knifed down so hard. And then, you would have been paying some serious premiums right there. So essentially what I'm getting at is that when you start seeing price action round out, you start seeing volume pick up, that's when you want to be making safer moves. You want to be selling calls, you want to be picking up volatility hedges, you want to be grabbing some short positions maybe. So you want to do things of that nature when you start seeing something like a rising wedge and you start seeing volatility or you start seeing volume pick up. So now we're in this next phase. We might have another run up. And what we could see is we could start seeing volume taper off a little bit. You could start rising up a little bit, and then maybe we enter a rising wedge of some sort. Maybe this 20-day moving average comes down a little bit, and then we run into that 20-day moving average. So you want to start predicting possible trends and seeing if it plays out. So as of now, maybe we can move in a trend channel, maybe we can move in a wedge. So who knows, or maybe we break out of this trend channel and the pattern doesn't become as clear. So who knows what exactly is going to happen. But one thing you do always want to look at is you always want to zoom out and see if there's any larger patterns at play. So, let's just see if there is. And you can always zoom out further. So yeah, notice this. We actually had this crash here in 2018. We bounced off right here. And then in our 2020 crash, it would have looked like we could have bounced off here. But instead, we actually knifed down and had capitulation. Now, once we got back above this level, that's when we really started rallying again. We went back to test it right here. And then if you look right over here where we are now, we basically knifed down just a little bit below that. So who knows, maybe this could act as support in the future. I don't know. Maybe this was the bottom. I don't know. I happen to think that it's not the bottom and we could see further selling. But I don't know that. And what also I don't know is this current trend right here. What's going to happen next? Are we just going to hit the top of a trend line and reject? Possibly. It could just go all the way over here. Could just reject at 211, right, where this prior doji is at. So we could just reject right here, 1140, for 1140, and then come right back down. And then we could have capitulation. So who knows exactly what's going to happen, but when we do start seeing this uptrend play out, and if it does play out, if we do have that uptrend, So I want to make that clear. We don't have to have this uptrend. If we do have this uptrend, we're going to watch it very carefully. We're going to watch volume very carefully. We're going to look for patterns like a rising wedge or a trend channel. And generally, the tighter these trend channels are, the nastier the potential fall could be. Same with these wedges. The tighter these wedges are, the nastier the potential fall could be. And these rising wedges don't always have to be extraordinarily bearish. So we could have a rising wedge, a tiny fall, and then we could go right back into having like a trend channel. So you got to be very careful with these. Sometimes it's just a quick dip down and another rally up. So I hope you guys enjoyed this video. And just to summarize the main points, check out volume, look for patterns. So hope you guys enjoyed this video, and stay safe out there.